Those of you guys, what's going on, Club MSC? It's BW, and yeah, today I'll be going over fair value gaps with you guys. So I'll put you guys on something called Google, right? Fair value gap. If you don't know any of the terminologies that you hear, from any traders, not just me or today, always Google it first. There's always valuable information, all right? So basically, fair value gap, right? We have an imbalance between candles, right? We have a small candle, the distance between this low, that's circled, and this high, that's circled, right? You see an impulse candle pushing down, and that causes a fair value gap, right? And that zone area, right? If we go back to this chart, we see a clear one right here, all right? And for those of you guys who are struggling with finding some type of market structure or understanding market structure, fair value gaps is a great way of having at least a short-term support resistance area in which you guys can utilize patterns or the strat or whatever way you trade with candle combinations that usually responds at these fair value gap areas, right? So we have fair value gap right here and right here, right? What I like to do, right, is I like to create a zone. So you guys can use the rectangle box. The settings would be extend to the right. So you just push it all the way through, and that creates a zone, right? And if the price doesn't hit there, it's okay. Eventually it will. There's always fair value gaps along the way. But let's just put this one here to start, and we're gonna kind of just use our eyes, all right, and just drag along. Right? Obviously, there's other fair value gaps down here, but what we want to see is how price reacts to these fair value gaps, right? The imbalance between this candle and this candle, right? Usually it gives an opportunity for price to come back to that area. And when it comes back to this area, right here, we got the strat combination, right? We got a 2-3, a 3-2 reversal at this fair value gap. So this is a perfect place. Obviously, this is the hour time frame. So you have plenty of time to see this rejection on the hourly to get in and have this PMG take out all these candles, right? Other people can view it differently, right? You could view it as possibly, right? Just like a channel, I guess, or some type of wedge out here. All right, however you want to view it, the fair value gaps is where you want to get the most of the action, right? As we push further down, there's another fair value gap here and here. So let's just kind of rehearse. So whenever you guys have the time as well, right? Just practice like this, right? It could be still during market hours. If you don't have replay, you guys can just go further back and just kind of slowly, without cheating, just drag it over and see how price reacts so you can get that practice in. All right, so we had a fair value gap right here as well. And you see how the price was kind of hugging this area, and then we get another 3-2 reversal, right, with strat terms. So the fair value gap is a great way of building market structure, right? For supply and demand, we could treat it like zones, like supply demand, right? So for those of you guys who don't know what supply is, supply is the area on top. When we have too much supply, what do? We sell, right? So resistance, we sell resistance, you don't long resistance, right? We have too much supply of something, you want to sell. Demand is usually at the bottom. What does that mean? If you have too much of something, what do? You get rid of it. Demand's opposite, right? When you don't have enough, it's in demand, so you buy it, right? So you long support, you short resistance. That's just the market structure, right? So understanding that, right, there's so many opportunities for you to actually use fair value gaps. This is just on the hourly to build that market structure. I'm gonna go in ahead and find opportunities where we can make a trade. But as you can see, we got a bounce right here. And then we got another opportunity where we see a rejection here within the hourly. And for those of you guys who know the strat, right, this is a 2-1-2 reversal, right? You could kind of view it as an evening star. And the reason why I like the strat is that if you didn't have a chart in front of you, right, I could just tell Moody, hey, we have a 2-1-2 reversal that looks like an evening star. And without him having the chart in front of him, he'll know what I'm talking about. So we got a 2-1-2 reversal here at the fair value gap, which gives you another perfect opportunity to short it, right? So the fair value gaps, they act, all right, as they move along, they act as past fair value gaps act as support and resistance. So you could either decide to keep them, or you can erase it and find another fair value gap and utilize it for later on, right? As you can see, price is exactly at the fair value gap where it was before. But after multiple touches, right, there's a chance that we could just rip through it like any support, right? So I'm gonna take you over to ES. All right, so this is a perfect example. I also have supply and demand charted, but here's an example of fair value gaps. I kind of want to walk you through what I saw. All right, so if you can see here on ES, I think there was I also do 5 minutes. So if you're studying fair value gaps, I advise you to study 1 or 2 time frames. All right, don't do like, oh, I saw a 6-hour fair value gap and I saw 4 hours and then 3 hours. You could do that, but understand that the candlesticks are a little bit different, right? So, but once you get a little bit better at it, there's other ways you can kind of mitigate it, right? You could be like, okay, I'll just overlap it and become like a heat map of zones, right? But I digress, right? So I had a fair value gap here on the 5 minutes, so we'll just keep note of that, right? But as price continues, or actually, no, it was actually here. As price continues, what you look for is price reaction at the fair value gaps. So a lot of times when people trade, right? If you're a beginning trader and sometimes you get stopped out a lot, one of the things to do is just kind of wait for that market structure to hit the top or the bottom so you can kind of make a play instead of trying to time those tops and bottoms in the middle of the range, right? So let's see how price reacts to this fair value gap right here. We rip through with an impulse candle, and guess what? We get 2 touches, and remember, this is the hourly time frame. So it gives you multiple chances to understand. If you saw this on the hourly chart and you're in the 5 minutes, switch back and look at the hourly of where we are in terms of the market structure. You would see that we broke below. You could view this as a bear flag, right? And we get a push below. So we look for actionable signals around fair value gaps. All right. So let's continue through. All right. This is a demand zone I have, but we'll go into that later on. All right. And as you kind of, back test the fair value gaps, you'll realize, that you have plenty of opportunities every single day with previous fair value gaps, right? We had a breakthrough retest, we had a breakthrough, and around this area, we see a 2-2 reversal again at this fair value gap. So this past fair value gap gave you 1, 2, and 3 opportunities to make a trade, right? So it's okay to be patient. It's okay if, obviously this is the hourly, you could do it on 5 minutes. So it gives you opportunities to enter trades. So let's fast forward a little bit more. All right, we had a smaller fair value gap right here. I think this was on the 5 minutes, and a supply zone, right? So what we try to do again, right, is when we notice fair value gaps, the importance of them is that they act as strong. I told JJ about fair value gaps. I told him what I look for at fair value gaps are their launch pads, right? So what I look for at fair value gaps is price taking off at those levels. So this launch pad right here shows you, hey, like we got a 2-2 reversal, right? And we got another actionable signal right here. This is a 2-2 reversal. There's opportunity to get in. And if you trade the strat, right, how do you enter? You enter on the break of this actionable signal. Stop loss with fair value gaps are also valuable because if you enter on the break of this fair value gap, right, you could find whatever target you want, right? Usually the targets you want to do on fair value gaps is you want to take out the highs, right, and break the structure, right? So previous pivots are the highs you want to take out, right? Fair value gap right here gives you a clear exit below this candle, right? And this would have been a very nice trade that takes you back to this other 5 minute fair value gap from previous, right? So the reason why I like fair value gaps is because it gives you a clear exit and a clear entry on plays. And the goal is to take out previous pivots, in which most cases they do, right? So if you notice, I think this was FOMC, we break out, we go to the next area where we create another 5 minute fair value gap. Yeah, it's 5 minute fair value gaps. As you can see, we had another 5 minute supply zone. And at these 5 minutes, you could also, what I like to do is I like to do 1 hour fair value gaps or 5 minute fair value gaps. And I like to trade on the 5 minutes. So when we get to these areas, I don't have to wait an hour for the actionable signal. I can kind of just wait for the 5-minute time frame which I trade on to look for those actionable signals to get in early. But I always check back and forth for time frame continuity. So let's see, this is ES. So let's get one more example in. Right here, right? At this 5-minute fair value gap, we advance over here, and the actionable signal may not be just in the form of a 2-2 reversal, but you could also see patterns here as well, right? So this neckline, this pivot low that we wanted to take out bouncing on this fair value gap was taken out as liquidity sweep, right? And we return back to this fair value gap. But each time we return, right, we get a high, higher high, and a lower high. So this market structure with the zone that we created on just the 5-minute fair value gap gives us a head and shoulders. So if you trade patterns, this is another opportunity to get in. You get a displacement right here, right? And if you get this kind of aggressive selling coming down, it's most likely going to go down and try to take out these lows, right? So trading, you can make trading a lot easier by having these types of levels in which you can predict things without having to go and create horizontal lines everywhere. And sometimes you confuse yourself having like a 1 hour support zone, 2 hour support zone. By having these fair value gaps gives you an actual opportunities to make actionable trades in such a short period of time without having to chart everything up, right? So yeah, let's go one more example. Hopefully you guys are understanding this. Is this making sense? Am I going too fast? How's everything so far, Moody?
You're on fire, bro. You're on fire. I love it. I'm like, dang, let's go. Yeah, absolutely, bro.
Okay, I think I got a question on the chat. For regular stocks, non-ES, do you turn on and off after hours or drawn? Okay, that's a good question. All right, so the reason why I'm doing this on ES and I'd like to do this on futures is because number one, this predicts where SPY is going to go. But I like to do a practice on futures and other currencies because there's no gaps, right? So if you want to learn the fundamentals first, I advise you guys to use like Forex or futures so you can kind of get the understanding of where these fair value gaps are and how they react. But they are the same, right? If you go to stocks, so let's try to go to SPY, for example. Right, we do get gap downs, right? But the foundation and the fundamentals are still the same, right? We get a 5-minute fair value gap here on SPY. And if it touches, it touches. If it doesn't, it's okay. We'll find another one. But if you can see, right, we had a 5-minute fair value gap right here. Price reacts here on the 2 down previous day. And we had a fair value gap here. So the next day today, where we actually had some crazy action, you can see that both fair value gaps were hit. We got the top hitting right here after that crazy pump. And we got an actionable signal 2-2 reversal, right? And then your entry, again, if you trade the strat, would be here. And your short, let's say you get in right here. And your exit, sorry, this is the magnet's on. And your exit would be the high of this candle, right? And then if you can't take this on a 0 DTE because it hurts your account, then don't trade 0 DTEs because you need to feel comfortable to where you can make the trade and not look at your P&L and trade your chart. But you're trading 0 DTEs, yeah, you go in here and you purchase here could be a big percentage, right? But we could take this to when you break the fair value gap, you try to take out previous pivots, right? Here, we take this out with impulse, so most likely we're going to come down. Targets here, we take this out, right? And you want to be trimming along the way, but usually right here would probably be the last exit, right? But if you really wanted to hold through because you have multiple contracts, we ended right here at the fair value gap and we bounced right back up here and we finally broke the fair value gap. So to debrief, fair value gaps are areas of the imbalances between 2 candles or 3 candles, a 3-candle structure where we have an impulse candle and the gap between it acts as an area where contracts need to be picked up. So when contracts return here, people can short it. Institutions are the only people who can really push prices down here. So fair value gaps and supply and demand areas are where institutions usually make big orders that push prices aggressively, right? Sometimes we can aggressively rip through after multiple touches, but institutions are the only people who could push price like this. And if you're a trader, I advise you not to always time the top, time the bottom. It's okay to wait for confirmation, right? If there's a break right here, there's a displacement right here with a heavy buying, you could wait for the close because most likely we're going to continue, right? So you just want a piece of the trade from this here to here, right? 5, 10, 15, 20-minute trade. That could have been lucrative as well, right? That's why you have to understand what your risk tolerance is and what you're willing to bet, and also what your emotional tolerance is as well, right? So if you can just get a piece of this and capture 15, 20%, that'd be great. So I hope I gave you some good examples of fair value gaps. And you guys have any questions?
Yeah, I think you got a few more in the chat right now.
Okay. How come the fair value gap isn't the whole candle? Okay. Okay. That's a good question. Remember, the fair value gap is always a 3-candle structure, right? It has to be a small candle or whatever candle, an impulse candle, and another candle. And if the wicks are long, right? If the wicks are long like this and like this, then it's no longer a fair value gap. Does that make sense? That's why a lot of times you'll see wicks that scare people, but it's just filling the fair value gap and continuing forward, right? So it's a 3 structural pattern where there is a gap between this candle and this candle that usually creates, right, an opportunity for later on for price to react, right? If you guys look at this right here, we have a bounce right here, right? We bounce up, we eventually break under, right? So that fair value gap is taken out. We have this right here and this right here. And look how price reacts to the fair value gaps. Right here, we fail to break above, right? Don't get scared by these wicks. Look at price gets pushed down, right? I know this is after hours, but look at this. If you go to the next day, we get triple rejection and another head and shoulders, right? So I would advise you to practice, right? Go home and practice whatever, or wherever you're at, and just drag it around and see how accurate it is, right? And if that helps you understand market structure a little bit better, right? Some people would play supply and demand, right? And the supply and demand I like to do is, oops, let's do here to here, right? And what I do is I use the fibs and I make my own supply zone, right? So with the 16 to 50 retracement. So this could also be a supply and demand thing as well. So there's multiple ways you could trade using zones, right? You could use a supply and demand rejection, or you could use the fair value gap rejections. I like the fair value gaps because you get to play in the middle of the supply and demand. So yeah.
One thing I note, I believe you have some more questions in the chart. I mean, in the chat. One thing I'll note is when to identify when there's a bullish fair value gap and a bearish fair value gap, right? So if you can just, I know you know what it is. If you could just identify that for them, like we know it's a 3-candle pattern, right? But the bullish is going to be from a high to a low versus the bearish is going to be from a low to a high.
High to the low.
You know,
So as in like where we're gonna get rejected and come right back down?
no, where you're drawing your fair value gap from.
See, that's a question I gotta ask you.
Oh,
Right here, how I play it is it's balanced. So I play them as kind of pullbacks, right? We get a pullback because the overall structure of this of where we are, right, as we're in an uptrend. So from us coming down here to here, it's not a reversal necessarily, but is this considered a bearish fair value gap to you?
Open up the candlestick right there where you just had your
Right here?
where you started at.
Oh, where we started it right here?
Just open it up for me real quick. Yeah, that is a bearish fair value gap because it's going from, you see your 3-candle structure.
Oh yeah, going down.
From the high is going from a low, right? You're connecting the low to the high of the 3rd candle.
Ah, I got it.
Now let's go to the right real quick. You're subconsciously doing it. Oh, I'm sorry, to your left. My apologies. All the way to, we're gonna go to a different one right there. You see the blue, your blue right there is going
low to high.
To low.
Okay.
So you're subconscious. That's why I say you're doing it. Like you're subconsciously doing it.
Okay. Cool. So yeah, so we're going low to high. We get an area above because that means the candles are below. So what we want to do is sometimes they act as magnets as well. So I want to say that. So if a price is pushing up, usually you know where it's going to go and where you should start seeing some resistance. And you can see this fair value gap, I get the bearish fair value gap. As we get pushed up, we get rejection, 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 and then we break this low. So I think this is an opportunity for you to at least not just jump into the trade. Sometimes people need that confirmation. So we get multiple
So check this out,
placements.
W. When I show my chart, I'll show this. So right there where you at, just keep the chart right there. All right, scroll, come down to, you see the pin bar, the red downtrend that's coming down, the red pin bar in the middle of the range coming down, come down some more right there, right? So connect, do a fair value gap from right there, not the pin bar, but the next candle to the right from his pin bar, exactly, right? Boom, you see that, right? That rejected the bearish fair value gap. There's so many fair value gaps within the fair value gap, right?
Yeah.
So depending on the time frame that you utilize, whether it's the hour, the 4 hour, right? We want to come down to a smaller time frame because we're going to find some more opportunity there, where this one already bottomed out. And as you spoke on it earlier, where we had that double bottom with both of those pin bars, that was, institutions bringing the price all the way down, coming into a demand zone, right? Where they're normally buying, but as well is restructuring the swing highs and the swing lows, right? Taking out some pivots all the way to your left. So that opportunity right there were for the bulls, right? Because the bears, you can see they rejected like they should have their fair value gap, and it came right back down off of the tweezer tops, right? Coming right back down. After that came out, I'm just someone that I trade what I see. I don't believe that the government, anybody's gonna help print these candles to make it look textbook or for me to see it. Once I get those double bottoms and it curls back up inside of that fair value gap, you see how you got like a triple top, right? And it's a bullish breakout right there, a bullish flag breakout continuation. I'm automatically seeing a cup and handle. I don't even care about the tweezer tops that's coming in between. I'm automatically seeing a cup and handle, right? And I was on a one-on-one session doing it live, and I was like, no, the price is going to go up here. They're going to keep ripping this back up. Why? Because it's all about swing highs and swing lows. And we have to always remember that these time frames, like my new way of saying it is, why would they want us to win? Right? And I say, institutions, whatever, the government, why would they want us to win? If these patterns work, they're subjective because of the time frames, because this time frame does not have enough time on it. A 5-minute doesn't have a 15-minute time to it, right? Doesn't have enough time to print out exactly what needs to happen, right? So each time frame is playing its own little world. So once we start to realize that, and we'll realize, hey, hold on, bigger time frames, bigger confirmation. If I'm seeing an actionable signal on a 4 or 6 hour chart, right, or even an hourly chart, let me go down to the smaller time frame because this is actionable and it's a reversible actionable signal. I must be getting some type of reversal to go ahead and break new highs. Let me go ahead and see what the swing highs and the swing lows are to be able to go ahead and execute on that opportunity. Does that make sense?
Yes, that does. Yes, that does.
Cool.
Is the long wicks liquidity? Yeah, sometimes long wicks are liquidity, right? So sometimes you might feel like if we have like all these equal highs and then we get a breakout, sometimes this is only to trap some of the buyers as we push price down. So I would be cautious, especially if you're using other indicators such as the RSI or something, that if we're slowly breaking the highs, just watch out for you want to break out with a more stronger candle. And this one's kind of strong, but you can see that immediately we get hit with the 3-2 reversal with this engulfing. So just be careful if we start seeing weakness, a weak high, that we could get a liquidity. This is just taking contracts or faking people out. So yeah, be mindful of those types of candles. That's why I like to always put like a level here. And if we're making highs, just to see if this market structure can be broken. Otherwise, we'll be looking for different fair value gaps below, right? You can see there's even a fair value gap right here.
Exactly.
Right. So experiments, I mean, obviously this fair value gap I could use for this, but if you found a different one, you'll notice how price always does some type of reaction at that fair value gap. So
Facts. BW, if you don't mind, allow me to show my screen, then I'll throw it back to you. If
absolutely.
And
How do I get it? Let me
and
see.
please, if you want to piggyback off of anything that you may see me elaborating on, just let me know.
Absolutely. All right.
Oh, it's not. Hold on. All right, my bad. All right, cool. All right, let's get into it. And to be honest, there's not, I'll go over a little bit of the fair value gap. Well, I'll just go over like how I utilize it as well. I do utilize it as well, the same way that BW does. But I'm not gonna lie, BW, I don't even know, I'm speechless. It was amazing. If anybody does have any more questions on it, please do ask. Let me take this off of that. All right. Would you like me to do it on a specific chart that you guys normally use? If not, I'll probably just go to QQQ because I haven't been
Tesla.
Tesla. All right. Oh, Jordan in the building. Stop playing with him.
Everybody in the chat saying spy. Oh, spy.
Hey, when you get a chance, go back to that QQQ, homie.
All right.
That's Bay right there. That's Bay right there.
That's Bay right there. Ooh, okay. I heard that. All right, so we'll throw up Tesla, go to SPY, and then we'll run back to QQQ. All right, so I'm just completely different. I ain't gonna lie. So I'll take every strategy, and I'm gonna show y'all two things, I guess, today. I'm gonna drop some gems on the 50% retracement, and what you can do with it, right? So, all right, where should I start? Fair value gaps, right? So automatically, me seeing a fair value gap, I automatically see one from here to here. A little different in BW, and I love the way BW does it because he's giving you the opportunity to highlight the area, right? I'm just used to seeing lines, and I like them, right? So there's a fair value gap here, and the opportunity, right? And this is just a 5-minute time frame. So I'm gonna go down to about the 1-minute time frame so you could be able to see your opportunity to get in, right? So give it some time. Oops, I always forget to do that. Delete. All right, let's go all the way to the beginning of this fair value gap. All right. So remember that we drew this on, I believe it was on not a 3-minute, but a 5-minute time frame, right? It was on a 5-minute time frame. So the fair value gap will look a little different because the line starts right here and this one starts right here, but you can still see it from this candle to this candle, right? So the opportunity that you're gonna have, right, just like BW was showing you on the hourly chart, right? Whether you find it on an hourly chart or wherever you find it, you can always see your opportunity and see how you're able to get in, right? So from oh dang. I'll bring it back so it doesn't take me forever to drag it over on the 3-minute. What I want to say, the 3-minute didn't show your opportunity that much. It just showed you that wick. So that's still an opportunity, but until you're able to identify with each and every one of these candlesticks, and there's not a lot, there's only a few of them, you'll start to recognize your opportunity where it's like, okay, this is a inverted pin bar, right? Or this is losing momentum, right? Understanding market structure from this candlestick, just the range, right? Let me be able to show you that. I'm gonna just draw it. Let me take the magnet out as I keep talking about the fair value gap. Just this market structure. And I just drew it, so understand that this drawing right here should be at the top of this candlestick, and the rest of this drawing should be right here at the bottom of this wick of the candlestick, right? That is its range, right? So your opportunity, once you started coming up, you could have threw your fib on here, and you would have seen you're above the 50% retracement, and right here, it tested your 50% retracement. Let me just throw it on there so you can see that. Right, so there's so many things that you can do with this, and let me go ahead and turn off the strat, because one thing that I do I don't mix the strat with the fair value gap. I utilize it as its own strategy. It is another tool in my toolbox, right? The strat is the strat. I still combine everything together, right? And it's lovely the way BW is doing it because he's combining strat reversal patterns around supports or resistance, right? And 9 times out of 10, his support and resistance, as I was looking at those candles, are going to be in between the 50% retracements of different ranges, right? So that I commend that. That is beautiful, and that's making it your own, right? So one thing that I would mention is wanting to leave out of this range, it is traveling up. It completes his market structure right there. It doesn't matter that the full candle's not up there. It was once full, lost momentum, right? And traveling back down. So even in this fair value gap, if you would have missed this move, this was your opportunity right here. This is what it looks like on an hour. You should have got in at the rejection of here. If you're utilizing a fair value gap and you say, hey, well, I want to utilize this strategy and I want to test it out. We have to put fear in its own box and understand that we'll utilize fear at some moments of our lives when we actually need to use it, right? But it's not a lot of times you need to use fear. And the reason I say that, because a lot of times using these fair value gaps, you're going to have to, whether it's bullish or bearish, catch the rejection or the bounce, right? And even if it's bouncing, it was a fair value gap to go up, right? Like, let's just mention like this one right here is not a fair value gap, but it's just a bullish breakout. I can make it a fair value gap off of a bigger time frame because it's just a 1 minute from this low to this high, right? And combine this. So yes, it is a minimum fair value gap. So when it bounced coming into this area again, it bounced here. It didn't bounce there, right? So you'll have to identify with that, right? And if you want to identify with that, is understanding price action and understanding where prices go, regardless of the fact it came to this 50% retracement or around it. See, 50% retracement goes up. I put the best tools possible together, right? And I only look for price action based strategies. Why? Because it's like a puzzle. So if you find the right puzzle pieces, the machine will flow more properly and accurately, right? You're going to have a well stream. So if that's not understandable, please let me know so I could go over it in a different way, right? But another way you could have caught, if you missed this rejection here, you could have caught it here, right? When it was trying to go back into the 50% retracement and gave you a minimum, right? Because we know that this is a bear flag still, but a minimum bear flag right there, right? We had it flagging on this green candle on this inside bar. Bear flag breaks out. You could have caught that one and took it back down, right? And when you keep these 50% retracements on here, right, you can always utilize them as rejections. Why? Because this is a zone, right? This is not, sorry, I apologize. That is definitely not a zone. It is a range, right? From this white line to this white line, this big red candlestick that is only $1.08. I know that from looking up here, right? Coming down $1.08. That was his range, right? So even to get back in here, just to explain this, and I want to have it accurate, this low right here of this candlestick, it is 194.49. So let's get back in here so you can understand how price action works. So we'll just put that there. We'll hit that there. We'll do that there. Was it 49? Like that, like so. Let's make sure. Yep, absolutely, right at his wick. So what I mean by this range, it will go back into the range, just like this is a range, right? Just like this candle was a range. This candle was a range. You can see that mirrored there, right? So as you see the time travel, and if we stay patient enough, right, it'll come back into this range, and we see, oh, we caught the rejection, took it all the way down, taking out swing, the other swing lows, right? Coming back into here, into your range, right? From that candlestick, it's still there. It's called price action. what happens? Oh, we test it. You always want to wait. Here's a gem. You always want to wait 3 to 4 touches. Normally people say 3 touches. I say 3 to 4 touches because sometimes the triple top will take it down, or sometimes the triple top won't even respect it. It'll be subjective and it'll go up. But even in the channel, you want to wait normally for about 3 to 4 touches, right? So you can see the few 3 to 4 touches that it gave, boom, comes back down, comes back. We got one there, we got another one there, we got another one there, boom, finally gets inside of his range. What does it do after it finally gets inside of his range? Moody, speak correctly. This is resistance, right? It was one support. You can see the bounces. Support turned to resistance, right? As we coming back into here, this is resistance. We're testing resistance. We finally travel inside in the resistance and reclaim it as support. That's how you reclaim support when it's coming back down. Reclaimed as support and bounce back up. This line is resistance, support, resistance, claim resistance, claim support, resistance, same thing, right? So as we see that, this resistance reclaimed as support, testing the next resistance, coming back down to test this support, break support, right? This time it rejects it for a little bit, but this is the 1 minute chart. Remember, the time frames are just your emotions. The time frame is just to identify whatever. If you're looking at the 5 minute, let's go down into the 1 minute. Let's break that candle down. What's really happening with this one bullish candle or this one bearish candle? Is there a bear flag? Is there pendant? What's really going on down here? And if we go down here, we understand that we're scalpers. We're impatient, right? You got to identify with that, because if you're not impatient, if you're not always like, yo, what's going on? You're not going to be on a 1 minute chart. So I just told you a little bit about Moody, right? And that's how you can identify with people's personalities and understand them, because they're going to tell you what their time frames, right? So does that make sense? Hopefully it does.
Yes.
It does make sense. I think if someone were to ask a question, how would you understand that once it gets into that range, you know, without being scared of it coming back out of that range? Like, what's that confirmation for you to stay in that range and push up?
Once I reclaim the support, because all it's going to do, if we're looking at these swing highs, is just going to either start a new swing high, or it's just going to take out. When I say start a new swing high, it's obviously not going to start. When it's, what I mean by that is when you see price come all the way down here. Let's just put a line right here. When you see price come all the way down here, it's been trying to take out all of these swing highs when the market ran up, right? All these pivot lows. Pivot lows, pivot lows, pivot lows, pivot lows, all of these took it out. This is creating a new swing high, right? Because it did not come out to take out those rest of those lows, created another one, boom, came back down, took them out, stopped out the trade. Who did they not take out the trade is what's important to know, right? And it's gonna be somewhere down here. This is where price hasn't came back and rebalanced. And people left, their orders got left. Boom, 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 came out, took all them out, still left them. Those people's orders never got filled, right? And if we look back, what's happening now? Creating a new one to go up higher. We always leave a jewel back there, right? And it's always going to be one or two of the first lows that started it that don't get taken out, or all of it gets taken out, and then it restarts again. And that's where it restarts, is where it's vital to catch a fair value gap, because that's like catching one of the first ones and taking it all the way up, right? So, but another confirmation for right here would be, like I said, reclaim support, right? This is the 1 minute chart. Let me leave this up here so you can see that these are your emotions, right? Because if I'm saying we reclaim support, I won't be getting out this trade. It doesn't matter if I came down all the way over there. If I was on a 15-minute chart, I didn't really see that much action. Do you feel me? You follow me? So I'm just explaining it on the 1 minute, but I'm understanding the 15-minute. You're not going to see that, because I got to take 15 candles and smack them all together on a 1 minute chart. And I'm able to do that in my mind, right? So when we know that, even coming into here, I can just delete, because it's all about price action. I can follow that same the same thing I did on the 1 minute, I can still follow it on here, right? But what's going to be better? I wouldn't want to do that because if it's bigger time frame, bigger confirmation, I would rather go bigger to small than small to bigger, right? We are always wanting to catch full time frame continuity from smaller to bigger because it's going to happen on a smaller time frame before it happens on a bigger time frame. If you catch it on a bigger time frame, that means you're late to the party, right? But now if you understand the market structure, hey, you may be late to that trigger. You could have got in earlier, but you're still not late. There's still some room, right? So for instance, let me just get into, because BW killed it with the fair value gap, right? One thing I'll let you know, looking into any one of these candles, there's always going to be fair value gaps in a lot of places, right? There's a fair value gap right there. And these are the best ones that I like to find. The ones where I don't have to draw 2 lines. What do I mean by that? I'm going to do it again. It's going to be like 1 line. Bow. See, I like to find those. But what I mean by 2 lines is having an impulsive candle like this and having a fair value gap, having a little small gap in there. And people tend to normally look for those, right? I tend to look for these, where it's like, okay, I don't even care about, I'm not going to be subjective and think about, oh, I need a gap inside of this fair value gap. Why? Because if I go to a smaller time frame, this is going to be a fair value gap. I'm just on a bigger time frame, right? I can get a better one with a gap like that, but let's see what happens on this one, right? This is a bearish one from low to high. As soon as that one came out, rejection, could have caught that one. That's 1 candlestick. That one ran back up, could have caught that one, came back down, didn't catch it. Now we already know if resistance or support continues to get tested multiple times, 3 to 4 to 5 times, it shall break because it's getting weaker. What happened? Test, almost a test. I'm not going to fight with the line. Test, right? Breaks out. Now it uses it as a bounce. You see the resistance falls, finally breaks, bull flags, bounce right at support, right at its resistance, reclaiming support, takes it up, tests the support again, comes back down, but it's still your fair value gap. It's still your fair value gap, just like this one is still your fair value gap to these 2 candles. You take it, boom, and it falls down, right? And if you find them on bigger time frames from a larger time, on a bigger time frame, and it's past data, take it to a smaller time frame. I just took it to a 2-minute chart just to take it to a 2-minute, but it's going to respect it, such as, and you're going to see it just as that. This is 1 fair value gap. That's all the way down there. This is another one, right? I don't want to move this. What is it? 193.79. So let's not look at this line down here. Just look at this one, right? This was a bearish one, the first one, right? It was coming from over there. Came, rejection. That was your entry. Even though it seemed like you missed it, entry. Came back, oh snap, no, I'm losing my profit. Wicks, comes back down, goes all the way back down, right? Let me go into the chat to see if there's any questions.
I guess just to add to it though, right? Moody, is like if you have that fair value gap that you have set, if that structure is broken, then you just got to get out of the trade, regardless if it's 6%, 8%, 15, 20%, right? If you're playing this fair value gap strategy and that structure is broken back up to the upside right there, then you just get out and you find another opportunity. And don't look at the P&L. Don't say I had to be 10% to get out. You know, if you're playing the fair value gap, you're using that as a bouncing area. I like to say launch pads, right? To push it down to the area where you want it to go. But if it's not going there, then you just cut it. So
Okay.
that's one thing that I learned from trading it.
Yeah. And I'll go into the last gem that I was going to drop. So with the 50% retracement, and I'll show some things, right? So Rob, one thing that I love about myself that I admire, and I also see that trait in BW, I see it in Jordan, I see it in so many different people, whereas they make something their own. Whether it's a strategy that has instructions, they still follow the instructions, but they make it their own. What do I mean by that? So we're going to talk about the 50% retracement. So this is Rob's strategy, the strat, which he created And I forgot the dude that created the fair value gap. If y'all want, I think his YouTube is like Trader Circle or something like that. Huh? Yeah. But dang, hold on, I just lost my train of thought.
You said making it your own.
Yeah, appreciate you, bro. So like making it your own. So Rob Smith had created the one rev strat, right? The 1 bar rev strat, which is this right here. You have the bearish one, you have the bullish one, right? And the strat is amazing, right? It's something that I learned after I was able to become a full-time trader. So one thing that I would tell you is I learned as well from Sarah Sniper. No, I didn't have screen time with Sarah Sniper. No, she didn't tell me, hey, this is how you do this is how you do that. She just explains herself very well on her YouTube channels, right? So I was able to take that, but you know, I always give flowers where it's due. She learned the strat as well and continue what I believe that is innovative. It doesn't matter if it's something that's already been done. If you can recreate it or do something to it to make it better, I believe that that's innovative, or doing something that hasn't been done, right? So this is still the strat, right? But Sarah went ahead, let me close that. Sarah went ahead and created the 50% retracement, right? Which is going to be right here off the 1 rev strat, right? Rob's entry, remember, is now her target. His entry was whatchamacallit, this is the bullish one. So his entry was at the top, breaking the high and going out and taking the previous candle's target, right? Sarah Sniper said, hey, I'm noticing something. His rev strat, I can just enter midway. If I'm entering right here and it's always taking out target, I'm just going to utilize a 50% retracement on this, right? And that's where I learned the 50% retracement. And I was like, whoa, that's dope. She was putting it on a 1 candle. Then I also started seeing her put it on a 2 candle to catch failed 2 ups, right? I seen that. I'm gonna take my own flowers. I seen that afterwards, right? But what I started doing, and BW, you could correct me if I'm wrong. I've said it plenty of times in classes, but I'm going to do it a different way to see if it can stick. The 50% retracement is not just, I always take it and make it my own. It doesn't matter how I wake up. I may trade the strat. I may trade support and resistance. I may just trade naked candlesticks and trade the patterns. Why? Because I'm gifted at being able to know these things. So why not utilize them depending on how I feel, just like the time frames as emotions, right? So let's just go ahead. And one thing that I would tell you, she was putting them on 1 bars. You can put them on 2 bars. You can put them on any bar you want. The only bars I tend not to put them on are small bars. When I do that, because I did it today on Crowd, right? If I take you to the Discord, to be transparent with you, you can see me do it right here. Still didn't take the trade, right? And BW, you could correct me if I'm wrong, because I was talking about this trade in the small group before I even put it out to the Discord. And I was like, oh, dang, I'm putting out all the juice in here. Let me put some stuff out in the Discord, right? So if we go up here and just look at Crowd right here, oh, dang, let me just click this because this is when I said she's ready now. Right here, let's go right here. Glad I waited. Let's go to quick scalp on Crowd. 109.95 entry, TP 1094 for calls. You can see the time. If you look at the screenshots that I put in chat with Moody, you will see that I called it out earlier than that, right? Anything else? You can see that I'm utilizing the 50% retracement on this 1 big candle. My entry is literally the 50% retracement. Look at the price, right? So I'm like, all right, cool. We can take that. Glad I waited, right? You can see, I even said, hey, glad I waited. What am I going to do? I'm going to utilize the same thing I'm going to teach you that you can do. Waited. She's ready now. I ain't care. I seen one crying emoji like this. I cry with. I'm like, you laughing with me? Let's go, bro. All right, now we go. All right, let's try to get it now. And I'm doing a whole bunch of one-on-one sessions. What happened next? She's ready now. Look at her. Back at entry. 50% retracement. Go take it. Let's go run. It's ready now. And it took off, right? I couldn't keep updating. I was doing too much things today, and my mind was just racing, right? But now let's go back to the charts so we can see what I'm about to do. Doesn't matter on what. Oh my goodness. Delete. Doesn't matter what time is it? Okay, I still got time. Doesn't matter what time frame. It works on every single time frame. Oh, I feel like Rob now. It works on every single time frame. It works on any big candlestick, right? Doesn't have to be humongous. It could be this candlestick. It could even be this candlestick, right? Not that big. And I'm gonna teach you there's several ways that you can utilize them, right? So I'm just trying to extend it as far as I can, and I'm just gonna put it at the bottom of the body of the candlestick, right? So, and this is just a 2-minute chart. And you can do this on any time frame, right? Let's say we missed this huge impulsive move, right? Missing the entry. We could have caught it on a 50% retracement anywhere over here. I'll probably show you later, right? So we get that impulsive move. What does it do? It comes back down to the 50% retracement. Hey, boom, it gave it to you. That's market structure. From the bottom there, that was a 40-cent move, a little bit more than 40-cent move, probably like a 50-cent move, right? That was a great move. Hey, what if you just did in your trade or you trimmed and you stood? Okay, boom, came right there, showing you actionable signals, pin bars, bullish pin bars, right? Boom, what happens there? Nice little PMG, 1, 2, 3, 4, 5 to me. Boom, right? You could look at this as, depending on how big of a time frame I go, like 3 or 4, that's a morning star, right? Because if I go to a 3-minute chart, these two candlesticks are going to go together. If I go to a 4-minute chart, yep, a 4-minute chart, these two should go together too, or all 3 of these should go together, creating me a morning star, right? So now we're completing market structure, the high of the previous high, just not the high, I apologize, the opening and closing of the previous range. Like when I showed you the range of this one candlestick right here, like you can, I'll show it to you in a second, but that range, it got completed. You can see, boom, we break out of it. You can utilize this as a bounce zone to get back into your trade, right? Or a breakout. We already exhausted. We took out some targets, coming back down again to the 50% retracement. Let's just say you all out your trade. You can get back in now. This has resettled and it's picking up the rest of them orders and taking out those candlesticks, because this one never came back for them. So now it's coming back. Bull flag breaks out. Let's say you just missed it right there. Well, I said you can add to your, I didn't say you can add to your position here, right? Or add to your position there if you've been holding, or you can just go ahead and say, hey, guess what? I'm getting back into my position. Whoop. Well, let's say you missed it. You could have got back in right there. You could even got back in right there, right?
I have a question, Moody. You showed, oh, sorry, this is a different chart. I'm sorry. I should have asked before. You showed this same scenario. I think it was on SPY on the 1 minute, but there were several candles that were red prior to the chart that you put the Fibonacci on.
Was it earlier in the class? It could have been BW. I don't think I traded on SPY. I taught on SPY today.
Oh, no, it was actually you. I probably wasn't paying attention to the one. I was just wondering why you used one candle versus not the whole set that was coming down.
Where explain that to me. What this one?
Okay, so you see how you have the green candle where you used the retracement, right? That candle. This was earlier. There were several candles prior to that one that were all coming down together. I don't remember which one it was though.
But it was on SPY, you're saying, right?
Yeah, I thought it was SPY. I thought that's what we were discussing.
Okay. So are you talking about this downtrend, or are you talking about when it was, because you said prior?
So it could be like, you can use this as a scenario. Like if you use one of these candles as the same, like you did that green one there, because it's coming down. I don't know if I'm articulating myself correctly. I was just trying to figure out why you used just that one candle and not the whole set of it coming down, because there was like 2 or 3 candles prior to that one,
Are you talking about these
where
candlesticks
the
right
price was coming down.
here? Are you talking about
Yes.
these
So I
right
was
here?
trying to figure out why you didn't use the whole set. Yeah. So you
I'm
use
saying
that
I
one
can't.
green candle and I'm sorry. So
Yeah, that
this
one-
one candle versus all 3. That's why I'm trying to figure out, why would you use one versus all 3? Because they're all going in the same direction, or am I missing something?
No, it's because this is a range. This candle is going to be a whole range in itself, right? These 3 candles is playing this range. Let me, I'll leave that there. I'll just put it right here on this one. Now I'm gonna have to delete it so you don't get too confused. Well, I ain't gonna delete it because I'm gonna
That's
explain.
also a bull flag area where she's talking about though too.
Huh?
The area she's talking about also, I think, is a bull flag, but I think that's the area she's talking about, that flag area right there where it ran up and then started to drop a bit and then it broke out.
Yeah.
I think that's the area she's talking about, but that's a bull flag area, so that'd be a bullish set. Obviously, it played out nicely.
Yeah.
Too.
Yeah, no, absolutely. You're 100% correct, Shane. Her question is more so based on why I only use this one candlestick instead of using all 3 of these. So my reply would be because it's in this. Let me erase this so you can understand, and I'll redo it. Hey, bro. Hey, bro. You snoring man hard. Yeah. No, you're good. You're good. So long story short, long story short, that was a bull flag area. My bad. My train of thought had got thrown off.
That's actually a good range too.
That was no, my bad. It's just my train of thought. I'm trying to get back to the charts. Whatchamacallit? Yes, that was the bull flag area, but this range, this one specific candle is a range, right? What I mean by that, if I open it up a little bit more, all of these candles are inside bars to this candlestick.
Okay.
Right? If I take this over to a 5-minute chart, we can see that a little bit more. This range inside, still inside. This one kind of broke out of it, but they're still like inside of this range, like the bodies of the candlesticks, everything is inside of this range, right? It's just like now that I moved it to a different time frame. That's why I say the time frames are just something that you're utilizing. It's like money, it's just a tool, right? So if we put it on this one, because it's a big candle, what does it do? It plays its range, but normally it's always, if you see the candlestick playing on its 50% range, not the whole range, it's going to bounce. It's going, that's the biggest gem I can give you. It's going to bounce. What you need is time. You need to get away from 0 DTE. I continue to tell people, please, please get time. If you go 2 weeks out and then you go right at the money or right out the money, guess what? The first thing you're going to tell yourself is like, Moody, that's too expensive. There you go. Go to American Airlines, go to Delta. Everything that you're seeing right here is happening on those charts too. You're going to blow your account. I've done it before. Please listen to me. Please. Right? And you're going to notice that, okay, if you got a little bit of money or whatnot, or you know the volatility, well, this moves $15 a day or $9 a day. This was $1 move right here. This is some good price action to use.
So how do you get this range here? How do you, maybe that's probably my confusion too. It's not the Fibonacci, right? It's some other.
I'm utilizing the Fibonacci to give me the 50% retracement, but the range is this candlestick.
Right. I'm saying, so you do use the Fibonacci little indicator for that range.
I use the Fibonacci for only the 50% retracement. The reason I say that is because the Fibonacci, if I say that and you throw it on your chart, you're going to curse me out in your head because I have all of these things turned off. Oops. I don't want to extend my line. I have
all those other ones. Okay.
Yeah, so you just have to have the 1, the 0, and the 50. So yours can look like mine. So it's going to have a whole bunch of lines. And you're going to be like, hey, where is Moody talking about bouncing? It's bouncing off of all of these lines, right? So it's just the 50
Makes
that
sense.
I'm using. And it's just this candlestick.
Okay.
It's price action based. So the thing is, we have people using that terminology and not telling people what price action means, right? Price action, all it means, I'm gonna hover over this candle and let's utilize our eyes and let's look at the O, the H, the L, the C, and the close. That is what price action is, right? The opening is the O, right? Which is this body, which is my support and my resistance, right? The opening of the candlestick is price action, right? The high, right? Because there's an H right there, is going to be the top of the wick. That's the highest period that this security has been on this particular time frame, right? So now that we know that, the L stands for low. It is the low of the candlestick, the lowest we've been on that previous on that particular time frame, right? On top of that, we have the close, right? Which is going to be the top of the candlestick, right? Because this is green. They open at the bottom, they close at the top. Not the top of the wick. That's just the price action. That's just the high of the candlestick, right? With everything that I just named, and then now you have percentage. This candlestick has moved $1.44. Now you have the price action of the candlestick and what's happening in the chart, right? And each one of these candlesticks are price action, but they all have a specific name and they all do a specific thing in the market. That's what price.
So you were explaining something about the contracts, right? So say for that move right there, that move that you were just talking about, that candle that you're at right now.
Say your question again. Hold on, because you just said that I said something about contracts. Say it again so I can remember what I said.
Yeah. I was gonna get there, homie. Yeah. No. I was trying to set it. I was trying to preface it with something else. But so you said for that move right there, you were saying that you would get a 2-week out contract at the money, correct?
That's not what I was saying. I was saying,
okay, got you.
What I was saying was, let's say if it's Tesla or if it's SPY, let me be a little more in depth about it. If it's Tesla or SPY, right? And we wanted to, I forgot how I was explaining it, but let's just say we wanted to trade. And I told you go.
You're talking about ODEs contracts getting same day expiration dates, like how it could blow up your account.
Exactly.
So go with something like week to 2 weeks out instead, gives you more time.
Yeah. Well, we'll put it like this. Let me just refine it so we won't be like repeating the same thing. How would you trade that right there? How would you? So say you were going in there for that trade right there. Mm-hmm. You see the price action is bullish. Obviously, the money is flowing to the upside because it just hit off of that demand down there. Money is flowing to the upside. Say you start at the bottom of that move, way at the bottom, right? Go down a little bit more. That right there. Okay, you see that? Okay, obviously, if it exhausted the down move, it's going up. How would you play that there, contract wise?
Contract wise, okay. You want to make money? All right, so I'm about to put it right here because there's a swing.
Explain two things. Explain the scalp way and then explain the day trade way.
I'm not about to do that, bro. I'm about to just give you the whole entire thing. So since you want the whole thing, check it out. Right, the market opens up. Right, this is Tuesday through. This is the whole Tuesday. Right, we're on a 5-minute chart. Right, you want to wait for your perfect setup. Right, this was your perfect setup. Right, so how I'm gonna explain it, and this can be. Let's not think of Tesla. Let's just look at candlesticks. Right, I'm gonna do it all off of the 50% retracement. Let's just say I grab this candlestick because there's a pretty decent candlestick. Wouldn't you agree? If you looked at my channel, if you have my alerts turned on, and you see me say about Allstate, and then I got on live and I spoke about it, and people were like, "Hey, what's your stop loss?" I was like, "Bro, I don't really got no stop loss. This shit ain't stopping me out." This shit ain't gonna stop me out if I catch it right here. Why? Because I understand swing highs and swing lows. I know to take out these targets right here. Right.
Exactly.
So what I'm gonna do, the contract wise, and I'll explain it like, let's say if it was SPY. If it was SPY, I'm a greedy motherfucker. I'm not gonna lie. Right. I'm gonna go at the money, right, on 0 DTE, and I'm gonna trim that one. That's how I'm gonna control my emotions. I'm gonna go not crazy heavy, maybe buy like 15 contracts or something. Right. I'm gonna go at the money, and then I'm gonna go at least 4 days out to 5 days out. I'm gonna go out the money, right? And I'm gonna at least go like 5 to 7 strike price out, right? And I'm gonna look at the creeks. right? I'm gonna look at the Greeks because there's gonna be a certain expiration date that's gonna give me a cheaper price than one coming earlier. People are just not gonna catch that, right? BW, correct me if I'm wrong. I believe you was with me and Raj when we were looking at XLF, and I was able to show him that, right? So, facts. So I'm gonna look at that, right? And I'm going to go ahead, and that's where my real position size is gonna be, right? Because I'm going to go ahead and start trimming on them 0 DTEs. And I'm just gonna hold the other ones. And the other ones are gonna hold more than my 0 DTEs. I'm gonna get crazy percentages on these, right? But I can lose my value super quick. Why? Because those are gonna hold more eccentric value. I have more time on it, right? So by the time I go up like this on my 0 DTE, you done lost like 20% off this move coming down like that. And then the consolidation are probably a little bit more. On my contracts that are 4 or 5 days out, I probably lost 5% in that consolidation. And then got it right back and just kept going.
Thanks. Appreciate you.
I add one more thing. So what Moody was saying earlier was that those ranges, right, especially on this chart, is that one range just to break out of it is like what, 50 cents or $1.40, right? That's why it's important to look at the Greeks, because sometimes all you need is $1, right? So if the Greeks line up to you and that's just $1, then you can even exit that because you know that the Greek is like 36 or 46, right? You buy 5-6 contracts, you're getting $46 for every dollar it moves up. So all you need to do is try to capture that 50 cent or $1 move if you want to scalp. So you have to kind of weigh what you want to do.
I got about 4 times.
Yeah, because like Moody doesn't know like what your contracts or how your trading style is, but you got to understand that you want to capture 50 cents, you want to capture $1, right? Make sure that you're studying the Greek so you can understand where your target should be. That matches with your account size.
Exactly. One person I'll say as well, because Tracy just shouted him out. She was saying she listens to Moody and Zay when it comes to the bad times on his contract. I think we all mentioned that, right? But that's just who she gravitates to. For one thing I'll say about Zay, you can even see his progression from him always being a scalper and a day trader. He was buying a good bit of contracts, but now he's buying a bunch of them, right? To give himself more time. You know what I'm saying? Not,
I think that's it.
hey, you mind muting yourself, John? Oh, yeah, I got you. Then I got you, big bro. So it's not necessarily like giving him more time, but more like when you're playing with capital, it's better. You can always somebody's 70%. I mean, somebody's $70 at 10% is somebody's $700 at 10%. It's somebody else's $7,000 at 10%. You know what I'm saying? So when you overstand that, you start to understand, all right, cool. What am I supposed to be trading? What am I supposed to be doing? You know what I'm saying? Like I told someone today on a session, if you know you're on a 1 minute chart, it's because you're impatient. If you're impatient, we got to still have some patience to it. What do we need to be trading? It's so easy to identify, but I tell people, hey, book a one-on-one session with me and I can possibly help you, or I can't help you if you just on a class, because it's tailored to everybody. It's not just tailored to you. But if you're on a 1 minute chart, just look for tweezer bottoms, evening stars, morning stars. There goes the evening star, rejected it, right? Evening stars, morning stars, tweezer bottoms, tweezer tops. Why? Because those are bullish or bearish reversals, not patterns, right? Head and shoulders is a pattern. Inverted head and shoulders is a pattern. That's why they get subjective sometimes, right? Cup and handle also, even though they're deemed them to be continuation patterns, no, they're not. Bull flags are continuation patterns. Why? Because you can see a bull flag. I'll just draw them all. After we run, this is all I see. So when you want to be a biased trader, right, and just trade your setups, you'll start to see bull flag. Oh, dang, it's not letting me be fast enough. Hold on. This is the pole. That's your flag. This is your pole, bull flag breakout. This is your whole, oh dang. This is the pole right here. This is your flag, a whole, Jesus Christ. Why is it not doing it?
Got the magnets on.
Oh yeah, there we go. Thank you, bro. Right there, right? Another pole right here. Let's move this guy a little back because it's on the green one. So you can see this evening star, right? And what we get another flag, right? There goes your bull flag. We're just not drawing on our charts, so we're not able to see that. That was a reversal pattern right there. That was like head, shoulders. Oh, nah, I'm trying to see too much. right? That's just an evening star that came back down to a support and gave you back a morning star to take you right back up. You see that? Reversal, bearish reversal into a bullish reversal, keeps going. And what does, once it gives you evening star into a morning star, what does it give you after that? Bull flag breakouts. Bull flag breakouts, because they're continuation patterns. Bull flag breakouts. Take it down to a smaller time frame. Moody, you're not lying to the people. Do you see these bull flag breakouts? Now you can start to identify with patterns and say, oh, cup and handle has bull flag breakouts, right? Patterns are subjective, but you can see them play out, right? If you want to see them, if you're trying to see them textbook, let me delete it. You won't even see this head and shoulders, right? Neckline and how it broke trend and came down.
I have a
But
question. Hello.
huh?
I'm sorry. Do you use Wyckoff schematics?
Do I use what?
Wyckoff.
White call somatics? I don't even know what that is.
Okay, thank you.
You're
I think it's
welcome.
those white cough, like those waves or something. I'm not sure. The white cough.
Yeah, that's a Wyckoff right there to the left.
White
Right there.
call.
Yeah, that's a Wyckoff structure. That's yeah. That it looked like a W right there at the bottom.
Right here.
Yeah, that's just like some consolidation, just simple market structure, not market structure, but price action, stuff like that. They call it Wyckoff.
Gotcha. Me,
Yeah.
I like double bottoms. So that's what
Yeah.
my eye.
Yeah, me too.
You know what I'm saying? And out of all of this whole entire setup, I'll tell you everything that I see. I don't see that because I don't know what that is, right?
Right.
If I learn what it is, I'll be able to see that now. So one thing I'll say, what I see in here, I seen the double bottoms. I see the morning star, right? Off of the morning star, right here, I see a bull flag breakout, right? Coming into a tweezer top reversal to come back down, creating you a head and shoulder. Oh, well, I can't do it with this. Delete. Bull flag breakout, right? Tweezer tops, that brings you back down because that's a bearish reversal pattern. Head and shoulders, really small, just shoulder, head, shoulders, neckline, breaks neckline, comes into a double bottom and gives you another bull flag breakout. Continuation patterns and keeps going. And this is 3 white soldiers. And then if you look at it correctly, not correctly, but like it's just what my eye see in all of this. I'm trying to see because I thought I just saw inverted head and shoulders.
Yeah, I think the white cough is just the accumulation and distribution where we're going from one range to another range. So I think that's what the person was trying to say.
Yeah.
But to tie up what Moody is saying back to like the fair value gap and how he finds his range using the Fibonacci, right? The 50% range of that impulse candle. It's very similar to like the fair value gaps, because if you have it creates a range between 2 different candles, right? It's a 3 candle structure. So that range is where you look for what Moody's showing you, like those pivots, those swing high, swing lows. So those are the type of candles that he's going over right now, the price action that you want to look at if you're practicing like fair value gaps or supply and demand, that you want to find like a double bottom. You want to see like these small mini bull flag breakouts. And those are the type of structures that you want to see get you from one range to another.
Exactly. That's a big fact. That's a big fact. And like I just drew some fair value gaps right here. We have one right here from the high to the low off the impulse candle. You can see how it came back down, grabbed it, came back down, grabbed it. What is that? Also, like I said, I put things together that is going to correlate with each other. That is also my 50% retracement. If I look at my RSI, that is also bouncing off of my 50 mark of my RSI. And that's why I say I'm like that. Because anything I have on my chart is going to correlate with anything that I'm speaking on, anything that I'm seeing, and everything that I'm doing. I am not the type of trader that's going to throw EMAs and all of this stuff, and I cannot talk to you about the EMAs on every single chart, or talk to you in depth about it, or tell you why it's going above it, or why it's going below it, and what it's actually doing. To me, that's scary. It's like, if you can't be in depth with me about that, you haven't been in the darkness long enough and found light. I don't know. That's just me. That's, you know what I mean? No, that's just me. Because I know how hard I go, right? And I had to learn, just because I go this hard and I feel this way doesn't mean that the next person's going to do that, right? So real quick, just to like, I found those fair value gaps. It doesn't matter where you put me on the chart, right? I'm always going to see them. Let's just go to QQQ. Somebody was talking about Qs. Give it a second.
Well, this is loading. I guess, does anybody have any questions on, I guess, what we're going over right now, specifically on what Moody's covering or fair value gaps? Not like contracts or anything, but to help you guys, you know, in case you guys want to learn fair value gaps. Yeah, feel free to ask questions right now.
And I could do it literally on this chart, but if we're paying attention, this is the same chart as Tesla.
So as the
Right.
fib, you basically using the fib to basically confirm that whether the trades are going to get breakout or a breakdown with an impulse candle, when an impulse candle takes place.
Yep.
Okay. All right.
And I could take it to a higher time frame to just give you some more structure onto it. So, because, you know, once we get to the white line on top of after the 50% retracement, it's like, hey, where do we go from there, right? But the left is always going to show us some things of that nature. I'll just utilize the hour. Let me try to find a nice setup that will, Jesus Christ, that would allow me to do so. All right, we'll catch it from the bottom over here. The bottom's all the way down there, but we'll catch this one. And I'll just start drawing them because it'll just start happening for me. So we'll do this right here, right? We know, okay, take the morning star. What's the morning star? Oh my God, it's literally with the price action right at your 50% retracement, right? It is a reversal pattern. We enter in trades at the 50% retracement, whether it's for calls to break or rejection for puts, right? Or puts because it's breaking from coming down to support to break the support to make it resistance now, right? So if we need to learn how to travel back up, how do we need to travel back up? The reason I say that is because your candlesticks are going to look like, let me not delete it. Matter of fact, let's go ahead and put so people won't say I'm cheating. We'll do it like this. All right, and we'll let it replay back. All right, Moody, we didn't got in the trade. We followed it. We took the morning star. We also know that morning stars can give us continuations, right? Moody, just be a little nasty with it. If we're seeing the morning star on the hour, right, we're definitely going to see it on a smaller time frame, right? Is not there. Okay, cool. I'm definitely going to catch it on the 30-minute. There it is, morning star. Boom. Correction. If I see it on the hour and the 30, man, I gotta see it somewhere else too, because it's a reversal pattern. They predict themselves on the chart. They show themselves every single time. Morning star right there. Oh, I could have caught that one, right? This was an evening star that rejected and came back into its zone. This was a morning star too. This is just a 5-minute chart. If I was to put these two charts together, these two, boom, 10-minute, boom, morning star, right? It's not on a 10-minute because I'm combining them in my head the way I want to combine it. No, I'm lying. It's on the 10-minute. It's right there, right? That just means we caught it too late. I keep telling people that if you see in the pattern on a bigger time frame, you're late to the party. You got to look at your range, how I'm showing you how you see your range to see if there's more room to continue up. Why? Because I am now on a 10-minute time frame showing you a morning star. You could have entered in right there, right? I can show you that on a 30-minute time frame. We're entering at the 50% retracement off the hour, but you could have got in right here, basically the 50% retracement again, right? So let's just go back to the hour, right? Once I go back to the hour, boom. How do I get back up there, Moody? First of all, I'll give you a gem. There's a gap to fill. Stop trying to go for the whole entire, oh, I'm going to go take it up there. This is where it's going to stop. So this is where you're going to want to see some rebalancing, and you want to use that as support and resistance. First gem. Second gem, throw your fib on this bad boy, right? And now you also don't need this green line because it's right there. So you know to trend, take profits, or add. Why? Because as soon as it leaves this range, it's going to this range, right? Let it play out. I'm gonna put it on like 3. That's your trigger. Psychologically, trade the chart. It's going to go red to green every single time. When it closes, it's going to trigger, it's going to go red, and then it's going to go green. Why? Because I do this every single day, and I'm a full-time trader. This is why I get passionate. I'd be like, dang, you're what? Why you don't know this? Right? Red to green, red to green. There's your 50% retracement. It's going to consolidate there, but we're going to smash that, and we're going to take it up there. Told you. And that's what I do. Anybody got any questions? My bad. I was feeling myself when I did that. But yeah, anybody got any questions?
You've earned the right to feel yourself.
I appreciate it. I believe I did.
What's that indicator right there? That MDW, that one right there, right next to the candle. What's that right there?
That's time frame continuity. That's letting you know that we're buying the yearly, the quarter, the month, the day, the weekly, and the daily, and the H. While everybody's calling it a bear market and we're going down, we flip continuity in January and we continue to go up ever since then. That's how I know it's a bull market. Not a bull market, but we're in a bull run. Is the indicator is TC, time frame continuity, but you could type in TC and it'll pop up. Here, I'll do it so you can be able to see it. Type that in, TC, time frame continuity, right here. And you can even use some of these. Like these are like this one's for the 15-minute time frame, and this one's for the hour time frame. What do I mean by that? Hey, let me just throw it on my chart. Y'all want gems? I'll give you gems. Just ask. I promise you, I'll tell you. It's just I'm learning something. The Lord says, ask and you shall receive. I ask him for everything and I receive. So, you know, I want to follow his rules. So let me go ahead and what was the gem I was going to show you? Oh yeah, just look right here in the middle of my chart, right? Did I turn them on? Let me see. Yeah, oh, it's right here. And the data moved it. It's right here. It's in the middle of my chart, but it's always going to be in the middle where the fresh candle is. It's already telling me to buy. I have full time frame continuity right now. This is the first full time frame continuity I was using because someone wouldn't tell me this one. Now you see how we was red and now we're green? And we're still buying? Go ahead, take out these highs. That's where we're going. We're going to take out those highs and we're going to rebalance and we're going to use this as support and resistance and we're going to fly, pelican fly off of a morning star, right? Continuation. And then if you take it down, that I just put on, you can only see it on an hour, right? And then you can go down to about your, oh no, it's your 15-minute time frame. My apologies. 15-minute time frame, and then it'll pop up right here as well. The one that has the I, FTCI, is for the 15-minute time frame. It's letting you know everything is being bought up. Anything from the 15-minute time frame down. It has full time frame continuity on the chart, right? And so you don't get confused how to use it. When it's green, it means buy, right? That we have full time frame continuity. And you still have to utilize it how I teach people how to catch the full time frame continuity on a smaller time frame. Don't wait for it to be green and then go. You can, but it's best to do it beforehand. Let's say I go to square, right? If they don't want, if they're telling you no full time frame continuity, it's going to be yellow, right? It's going to say wait, right? If it's full time frame continuity to the downside, it's going to be, you see, wait. No full time frame continuity. This is when I'm looking to get in my trade. That I'm looking, I'm like, okay, actionable signals. I'm going through the time frames. All right, boom. I'm gonna catch the full time frame continuity. I want to be in this when it's going green already. Like, yeah, let's go, right? So that's how you utilize it. And when it's bearish, it goes down. It goes red, right? VIX is probably red. But yeah,
There's no special settings or nothing like that.
no special settings.
All right.
Yeah, it just correlates together. It just lets you know.
Hey, can you explain that what we were talking about with the 1 minute? You were like, if you're on a 1 minute, you're impatient. And what did you mean by that? So, cause like I ain't gonna lie, I profit pretty good on that 1 minute. I ain't gonna lie, like the scalps and stuff like that.
So
1
like,
minute.
Go ahead. I'm sorry.
What were you explaining? What were you trying to say with that?
I'm just really also just talking from experience, right? I always tell people when people are speaking, they're really speaking about themselves a lot. So I just identify with the, oh dang, yeah, I gotta go. I just identify with the time frames as being my emotions, right? I have to do a class on it or something like that, but I think I'm gonna wait because Jordan has something super special and I'm gonna bring it into what he has going on. But it's me utilizing the time frames all together to know like, okay, cool. If I'm on a 1 minute time frame, I already know that I'm a scalper. I already know that that scalper mentality. I need to be in and out of my trades. I need to know the range, right? Like how I was showing, like just with the candlesticks, we see big candles just like this on a 1 minute, knowing the range. You see that range? We bought the support of that range because I say that the support and resistance is the bodies of the candlesticks. So once it got down to the body of that candlesticks, we found some support, right? It traveled down. It came back to its opening price. That opening price is support and resistance. Now that we're back over that opening price, we're holding support, broke resistance within that one candlestick. I see everything within one candlestick. So it's like, boom, now it's going up. Now I know, okay, it's going to play with this 50% retracement, but we're going to take it all the way up here. What is it going to do? Exactly what I just said. Play at the 50% retracement, open, play, boom, go up, bow. You didn't take your profit, gave you a little bit more time, took out a PMG. Oh, you got too greedy, evening star. Why? Because it's a bearish reversal pattern. Once you know the patterns and what to trade and learning from the right person, trading just easy. Look at BW. Is trading easy, BW?
Depends. You can make it easy, you can make it hard.
There you go. That's a big fact. Right? So yeah, so if you're on a 1 minute, you're impatient and you know you're impatient if you're on a 1 minute. You just go to the 5 minute and try to trade the 1 minute like 5 minutes. You go, man, what the heck, man? It's gonna happen already, man. You're gonna be putting them emojis like move. Because you're impatient. I realized that by going to therapy, and my therapist told me that. She's like, you're on the 1 minute, Kelvin, because you want more data so you can understand what's happening so you can make. I'm like, whoa, facts. I didn't understand that. And it made me look at the chart completely different. And I'm like, got it. So I look at all candlesticks completely different. If I'm on an hourly chart, I'm seeing the 30 minute, the 15 minute, the 5 minute chart already. And I already know how many candlesticks are going to play out in a day. The hourly is only going to give me 7 candles to trade off of. If I'm trading the strat and I want to trade the strat, I just got I have 3 trades. I have 2 day trades, 2-1-2, 2-1-2, or 3-2-1, whatever. And then I have a swing trade, right? High probability. It is still a guess, but it's a high probability trade. Oh, this is 2-1. I'm looking at we're gonna go 2-1-2 to the upside because we're still on the swing high. We already took out those swing lows, you know. So it's a high probability guess. You know what I'm saying? And that's just I don't know. That's just me, bro. It's just me, and I'm learning like, no, I'm the one that sees like this. I'm thinking that everybody can see like this, but not. But one thing that I know that I can do is that I can help you see what I see. I just need a one-on-one session with you. I got to see how you think. And then I could be like, oh, okay, cool. Anybody that's thinking a one-on-one session with me throughout this week, they could tell you, no, it's not like your classes. You tailor it to that person. But yeah. Did I answer your question about the 1 minute?
Yeah, you did. I appreciate that, homie.
You already know it, bro. But yeah, I'm gonna stop sharing my screen here. Was JJ able to make it? Because I know he'd be working and stuff. I'm not sure if he will.
I think he's still working right now, but it's all good. He'll catch up with us. We can do another fair value gap class in the future. So hopefully we can add to this and give more examples.
That's a big fact. I think I just came up with another one. Let's just do another fair value gap. Bring JJ into it so he can bring what he brings to the table, and then possibly see if Raj is free and do a fair value gap class in between supply and demand.
I love it. I love it.
Yeah. Jordan back. What's popping though?
Bro, I'm tripping. I thought today was Friday. I was like, yeah, bro, Raj finna run a class after me tonight, bro. MSC club. Yeah, it's not
man.
Friday.
What is today?
It's Tuesday, bro.
Yeah, okay, cool. I know today's Tuesday.
Yeah, I didn't. Nah.
I didn't know my schedule, bro. Ugh.
But it was dope though, bro. I appreciate you, bro. I appreciate BW for spending the time and sharing what he's learned and picked up on the fair value gap and breaking it down. And then, you still being that helping hand and kind of just guiding through everything. Y'all did great, bro.
Appreciate it, bro. That's what we do, bro.
Kind of made me want to run a class
class
right
next.
now.
Fire class. Good stuff.
I'm finna run a class. Oh no, I got a phone call. I gotta make.
I'm saying, bro.
All right, I gotta talk to Zay about some stuff. But after I talk to Zay, I'm gonna run the class.
Bro, I gotta hit Zay up too. Dang, I gotta hit Zay and Lauren up actually.
Hey, how long y'all been on?
Oh, bro, I can't even tell you. I think 4:30.
Yeah.
Missed that whole thing, huh?
Yeah,
I'm gonna
man.
open something up a little later. I gotta talk to Zay real quick about some stuff, and then I'll probably open something up, figure out something to go over real quick.
Are y'all putting that recording out?
It
Are
ain't
y'all
mine.
putting that recording out today?
BW, are we putting this recording out?
If people found value in it, yeah, absolutely.
It
There you
was
go.
valuable, bro.
There we go. Yeah, we'll put the recording.
Drop that.
He said drop
Yeah,
that.
it was a solid class, guys. I'd put it out. It was good. Good stuff, Moody. Thank you for your time. You too, BW. Good stuff.
Thank you. Thank you.
Yeah, I just value my time, bro. I ain't gonna cap. I value everybody's time. I respect it. But no, yeah, I'll put it out. I gotta put out the class that Jordan and I did on the Greeks and how to trade SPY, 0 DTEs, or how, well, it was not really a 0 DTE class. It's about, you can buy a couple of times and things of that nature. Let me see what they saying in the chat. But nah, yeah, we're gonna put it out. Most definitely, bro. It's BW the GOAT. I don't even like to call BW the GOAT. He ain't no GOAT, man. That dude is a living legend. She said yes, all them classes. Yeah. I'm gonna start putting them out. I promise you. I got it's just, look, it's still in the box. It's still in the box. Like, I just gotta find time. Like, I have something to do right now. I need to get off here while I'm over here just talking to y'all and just trying to debrief. But yeah, everybody that is lifetime that hasn't booked their one-on-one session, please go ahead and book it. I'm not gonna be reminding every single day about it, but you just have February, and I'm just gonna do the most that I can. And if you're the last person, I normally stay on there a little longer. You could ask anybody, right? But yeah.
Hey, pick me. I got something.
Bro, you need to give me a
I don't want to spill the beans. Hey,
hey,
make
bro.
sure y'all on Friday night's class, man.
Oh, snap, you gonna spill beans on Friday.
Make
Oh,
sure
no.
y'all on class. Oh, my mama called me. Hold up.
Get
What
on him.
up, Ma?
You hear something big
Get on
planned
him.
for Friday?
Hey, you're not muted, bro. But nah, yeah, does anybody have any questions for BW or I? And one last thing, what I'd say to everybody that's on here, there is still a good people on here. Just know, just be mindful. There's a whole bunch of questions, just be mindful until I get to yours. But like, bro, if you, or bros or bronettes, if you don't know where to get in the trade, it's not hard to just, take a screenshot and be like, yo, Moody, at least go to the Moody chat so I can be able to see it, or tag me and be like, yo, Moody, where would you enter in and where would you take the profits at? 9 times out of 10, I'm just going to grab the chart. I'm going to go chart it up for you and give you entries for calls and puts, and then tell you what I deem that I believe is going to happen. I think it's going to be more calls, but here you go. Have fun. Why? Because what you eat don't make me shit. Why would I not want to see you win? Why would I want to see you lose? Like, you know what I'm saying? And I promise my time is going to get extremely limited. Can you record Friday night's class? I honor the Shabbat, so I can't attend. Absolutely. Jordan always records his classes. Yeah, I feel you. My mom honors the Shabbat too. She'd be like, Moody, why you on the Discord? Ain't the sun down? Be like, Mom, come on. She'd be like, the sun down, right? Go rest. Yeah. Oh, you know what I'm talking about then. Okay, cool. Not everybody will catch it. But yeah, Elohim over everything. And shalom to you. My apologies. What channel does the recording get posted? The recording gets posted in the recording section. But I got somewhere I gotta go and something I gotta do. So you guys don't gotta go, but you gotta get up out of here. Yes, the class was recorded. You're gonna hear it. Look, watch.